Hello, investors and traders, and welcome to the weekly market report. I'm AJMonte, Chief Market Strategist with Sticky Trades, and we had an incredible week. If you had a chance to watch the report from last Friday, I said that the Dow had a good chance of rallying 500 to 600 points. Not only did we hit our targets on the way up, but we blew through those targets. And let's get right to the chart. You can see right here, the diamonds are showing this small body candle known as a spinning top. Now keep that in mind because spinning tops are usually found at pivot points. You see one back here, you see another spinning top back here, and not only is that spinning top occurring right at that resistance area, we're seeing a drop in volume after a stale green light. That's a long stretch of green, and that tells us that we are long overdue for a red. So I'm going to do a two-part forecast. There's the close of the market. I'm going to do a two-part forecast here where I say on Monday or Tuesday, we're going to see a drop in volume here and then a pivot point lower after that drop in volume. Now I'm going pretty aggressively to the downside here with my downside target of 335.77. So again, last week we forecasted up. We blew through that target. This coming week, I'm going right back down to that moving average. Let's take a look at IWM. You can see here, same thing. We hit the upside target right there. We gapped up yesterday. We gapped up again today on the unemployment news, and we stopped right at this roll reversal. I'm just going to extend that to the right because that roll reversal is acting as a resistance level, and you can see that we closed below it just by a hair. Now the volume is still going up on IWM. I think we're going to see the drop in volume there as well. Look down below, you see this wide divergence between the K and the D. That's extremely bearish, and we have an extremely overbought condition in the CCI. So where am I going with IWM? Right back down to fill this gap, and by the time that gap fills, this moving average will be matching up with it. So keep your eye on that moving average. If we break back down below that moving average, then we'll be on our way to filling this gap that was left yesterday. So again, downside target, IWM is 170.18, 170.18. Now let's look at QQQ as we go in alphabetical order right here. You can see we are right up at number 5 fan line right there. And I believe we're going to pull right back down and to that moving average, which would form a KOD. Those who have been following me know what a KOD is. It's the failure of the price to get back up on trend. I think we're going to see a miserable failure there, trapping all the bulls in this bull trap, and right back down to that moving average. Take a look again. Count them. 5 green candles in a row. Drop in volume on the way up is bearish. Wide divergence from the moving average. We have an overbought condition in the CCI. I think the CCI is going to pivot lower. I'll forecast that for you as well. And the gap down below the market will act as a price magnet. So this is fairly predictable. I want to give guarantees here, but I feel really good about the downside targets being hit, which would bring us to 11 weeks in a row of hitting 100% of the targets over a 10-week period so far. Can we push it to 11 weeks? Let's see. Only time will tell. So again, downside target for QQQ is 361.19. And with that, let's go at SPY. You can see here we hit the upside target again, blew through that roll reversal. Now what do we have? We have this as a resistance point right there. Let me just back up just a little bit. That resistance is a gap fill resistance as well. So we have very close to a shooting star right there on that candle. 2 gaps. We have a gap on Thursday, gap on Friday. Slight drop in volume here, wide divergence from the moving average. We have an overbought condition in the CCI. Remember, one of the things that we looked at last week, and I talked about this as a positive divergence last week, when we had a lower price low on SPY, but we had a higher low on the CCI. That's one of the reasons why I was going so aggressive to the upside. Now, congratulations to traders out there who took all the long positions that went out through our trade publication. So congratulations, making money on the way up. Now our option traders are positioned to make money back on the way down. So downside target on SPY is again conservative. Downside target at that moving average of 427.50. Now let's take a look at the VIX. This one right here, we have 5 red candles in a row. We're right at that role reversal support level. Look at this stochastic already starting to pivot or hinge from that low level, and we have a very clear hinge or pivot on the CCI. So I think the CCI is going to move up, create a buy signal once it crosses over that green line. Then where am I going with the VIX? I'm going right back up to the moving average, and that target is $18.11. So again, congratulations to all of our members who are making money with us through the trade publications. Option traders, stand by, because next week we're going to be pretty busy as we're rolling the short side of our put spreads to collect that cash. Now let's go to the geopolitical news. First, my philosophy here, at least for next week, is buy the rumor. We already did that this week. Sell the news. The news is out, but there's more to the news than what you might be seeing on the financial programs. Today, Hezbollah put an ultimatum out to Israel calling for a ceasefire. That was to happen today, November 3rd, or they were going to mobilize for war, and that would be a full mobilization. What was Israel's answer to that? No. They're totally rejecting ceasefire calls. And the way I see it right now, the warmongers are getting their way. This to me looks like an escalation that could very well lead us closer and closer to World War III. As I said many times, I pray that doesn't happen. But this does not look like it's calming down. It's escalating. Hamas is moving together with Hezbollah. Iran is backing Hezbollah. You might have Russia or China coming in to back Iran. And then we have a full-blown escalation with the U.S. getting involved. Now, in addition to that, as I've mentioned many times, you have to keep your eye on China. The USS Gerald R. Ford, the Dwight D. Eisenhower together are in the Eastern Med right now. These are 2 carrier strike groups, and I've been part of these in the past. They don't send 2 or 3 carrier strike groups out there just to intimidate our enemies. This is getting ready. This is ramping up. There are hundreds of aircraft and thousands of crew members for each carrier. There's at least 6,000 crew members per carrier, and that's not even counting the destroyers, the tenders, the refuelers, the submarines, the submarine tenders. This is a force that is absolutely incredible, and some are saying this is a buildup of naval forces that we haven't seen since World War II. So keep your eye on that. Now, while we're busy and distracted by Ukraine and by Israel and what's happening in Gaza, you have to understand that China is sitting pretty right now, just waiting it out. I think China is lying in wait, waiting for us to be at our weakest point, and then I do believe they're going to move into Taiwan. At that point, we'll have to see how the markets react. I don't believe the markets will rally on that news. I have extreme downside targets still set at the March 2020 lows across the board on all major markets. Now, this next sell-off, I believe, is going to take out the most recent lows from last month. Then I think the volume is going to increase. We'll see a slight bounce back up to the roll reversal resistance once that support level is broken. And then from there, we'll have to see another leg lower. And we're geared up for that. Our option traders are loaded up with negative delta. Now, if you're interested in getting a copy of my trading checklist, I have a revised edition right now. Just send us an email to stickytrades.com. Go to the Contact Us link, and we will email you a copy in PDF format. And then you could follow along with the charts as I go through the technical signals with you. So with that, you have a good weekend. I'll talk to you on the next report. So long.